Everybody in the beginning, they think that, okay, so I'm going to get a mortgage loan for myself, for my home. But you should know there are many hundreds, maybe even thousands of different types of loans and debts available. And they call them different products. This is the job of loan officer to find you the best product. These all have their own intricacies that a loan officer has to choose. Does it matter who you are when you're applying for a loan? Absolutely. Based on your credit and income profile, where do you fit? If you're a physician, there might be loans for you that require very low down payment and they do not consider your student debts as your debt. FHA, Federal Housing Administration loan. We have all heard FHA loans. This is a loan that you want to choose if you are starting, you don't have much down payment, your credit history is short, and you have a good income. VA, Veteran Administration loan. Is VA good for all veterans? Not necessarily. It might not even be good for you because there are things in VA, for example, funding fees, that might work against you. That's a fee you shouldn't pay if you get a small loan from Fannie Mae and Freddie Mac. Those rates are even better. You don't have to go VA all the time. The other option is a conventional loan. Loans that Fannie Mae and Freddie Mac buy are the most prevalent in the market. Those have their own criteria. So if you have good credit and a decent amount of down payment, somewhere between 3% and 20% or even more down payment, that might be a good choice for you. If your income is not necessarily a traditional way of earning income, for example, if your income is different than, your cash flow is different than what shows on your tax returns, we use bank statement types of loans for you. Especially in California, because the home values are higher, that might not be the case. For example, if somebody's buying a home in higher end areas in Los Angeles or San Francisco, they end up a $2 million home, and a $2 million home with even $500,000 down payment, the loan will be about $1.5 million. And those don't fit Fannie Mae and Freddie Mac guidelines. So that becomes a jumbo loan now. Every year, Fannie Mae and Freddie Mac, they change their numbers. First thing you need to do is you have to speak to your loan officer and figure out what your credit and income and asset profile is. When that has been analyzed, then your loan officer will offer you a few options. You're always the last person to choose those options, but he would know more about those products and where to guide you. My name is Bryan Zadeh. I am a VP of Mortgage Lending here at Guaranteed Rate. I'm a branch manager. I hope this was helpful. Please don't forget to subscribe, and more information about loan is coming every week. Thank you so much.